watch these 5 major Roth IRA mistakes and how to avoid them. Ah! Get those investments away from me. Save yourself. There's no question that the greatest investment tool that exists today is the Roth IRA, especially if you're a younger investor. And the reason that the Roth IRA is the greatest investment tool right now is for this one simple reason, and that is tax-free money. It's awesome, right? But not if you're putting your money in the wrong thing. And there are 4 investments you should never put inside the Roth IRA. Also, I'm going to reveal to you the ugliest Roth IRA imposter that you'll want to avoid at all costs. I should let others know about this. Can you do me a favour and make sure to share this with one person who's thinking of opening a Roth IRA, please? Also, make sure to add me on your favourite social medias. Why? Because I post on LinkedIn, Twitter, Pinterest, YouTube and this blog with content that will transform you into a stronger entrepreneur and investor. I also give discounts that you can get instant access to so you can grab great deals on products. Also, I hand you motivational quotes that keep you inspired and uplifted. And lastly, is so you never miss a blog post. You can do so with the links in description below. I see a lot of people who have a misconception about the Roth IRA. They think the Roth IRA is an investment. They think that if you open up a Roth IRA, it's going to pay you dividends or interest. I'll break this down for you. The Roth IRA is not an investment. If you're not quite sure how the Roth IRA works, then you need to check this video by Jazz Wealth Managers, where he talks about the Roth IRA Explained, a simple explanation of the Roth IRA. The link to this video will be in the description below. Once you understand the fundamentals and how the Roth IRA works, now it's time to decide what you're going to place inside of it. You can buy stocks, mutual funds, ETFs, bonds, and a bunch more. But just because you can buy a lot of different things and place them inside a Roth IRA doesn't mean you should, and that's what we're going to be talking about today. So, what are the 4 investments that you should never put inside your Roth IRA? Well, you're about to find out. Number 1, penny stocks. But a event ago, what are penny stocks? Well, typically a penny stock is a stock that is trading below a certain price, mostly under $5 per share, and is usually not available on the major stock exchanges. You can usually find it being traded over the counter, OTC for short, on Pink Sheets and other places like that. But a event ago, why isn't this a good option for me? The big reason why penny stocks have so much attention is because people believe they can take a small amount of money and buy a lot of shares. Here's an example. If you're buying 700 shares of a 4-cent stock and all of a sudden it goes up to 90 cents, $3 or $10, all of a sudden you've made a ton of money overnight. Oops, sorry to ruin the fun for you, but that's not going to happen. I'm not sure what the stats say on the chances of losing money on a penny stock, but I'm going to safely bet it's 90% or higher. The reason why you would never want to buy penny stocks in a Roth IRA is because you can only put in a certain amount of money each year. Right now, the most you can put in a Roth IRA is $6,000 or $7,000 if you're 50 years old or more. Think about it. If you put in $6,000 and you put all your contribution into a penny stock and that penny stock fails, that means you lost your entire Roth IRA contribution for that year, and the IRS doesn't allow you to try again. It takes a long time to be able to save enough to invest inside the Roth IRA, so you don't want to put it in something that's going to potentially lose everything that you've put your blood, sweat and tears into. Number 2, short-term bonds. Bonds are typically seen as a safe investment, which they are, relatively speaking, if you were to compare them to stocks, currencies, and CFDs. But what I don't understand is why would you want to place your potential tax-free retirement investments inside a short-term bond? Roths are meant for the long term. You want to put that money in and have it grow so you can have a huge tax-free amount waiting for you later. If you're going to put that into a short-term bond that's paying you next to nothing on interest, it's not worth it. There are different types of short-term bonds that you can buy and place inside your Roth IRA. There are individual bonds, mutual funds that specialize in short-term bonds, or you can buy ETFs that specialize in short-term bonds. One of those short-term bonds is the Fidelity Short-Term Bond Fund. At the time of me saying this to you, it has a yield of 1.76%. I don't understand why you would want to make 1.76%, especially when you have something that's going to capitalize on compound interest. So, you can have a huge tax-free chunk of money waiting for you. Unfortunately, that's never going to happen if you're only making 1.76%. Another variation of this is with these robot advisors and investment apps and how they market these saving account alternatives. But if you look at the marketing material, it's saying that their accounts are paying 20 times more than the national savings account rate, which is true, but you have to realize we're not comparing the same two things. We're looking at short-term bonds and treasury bills being compared to a savings account. I remember some savings accounts were paying 2.25%, which is great if you're looking at that as a savings account alternatives. But if you're opening up a Roth IRA and you're putting that into a high yield savings account that's only paying you 2.25%, you're not taking advantage of compound interest. Just to show you the effect of putting your money into a high yield savings account, which is really just a short term bond, over the long term, if you're putting $100 a month over 30 years and you're making 6% interest, at the end of the 30 years, you'll have over $101,054. Now, let's say instead of making 6% on your money, you decide to put it into a high yield savings account that's only paying you 2.25% interest rate over the same time. The difference is you're only going to get $51,545. Can you believe that? You just gave up $49,509, all because you put it into a high yield savings account. This emphasizes why you don't want to have short-term bonds inside your Roth IRA. Number 3, an annuity. It doesn't matter what type of an annuity it is. It could be a fixed annuity, variable annuity, or a fixed index annuity. If you don't understand how annuities work, the number one thing you need to know is that if you put your money inside an annuity, it already offers you tax deferral. That's how these investment products are structured. You're already getting a tax deferral, so why would you put your money into an investment that already offers you tax deferral and then you take that and put it into a Roth IRA? It's not like you're going to get double tax happiness. That's not how it works. Yeah, I see so many different advisors selling annuities inside a Roth IRA, and it doesn't make sense. This is why I hate hearing people say they have put annuities inside a Roth IRA, because most of the time, the person that bought it has no idea what they have. They don't realize that the annuity they bought has high fees and high surrender charges. Most investors have little or no clue on how much fees are associated with annuities. For example, the average internal expense for a variable annuity is 3 to 5%. And that's not a one-time thing. This is per year that you're paying 3 to 5% on your money. And the sneaky part is you don't even see it. The insurance company just slide it out. So you never notice how much you're being scammed. Other than the fact you have this investment for 10 years and you can't figure out why you haven't made any money on this investment. So please avoid annuities, especially variable annuities inside your Roth IRA. Number 4, cash. You don't want to have cash, or at least too much cash, inside your Roth IRA. If you're opening a Roth IRA at your local bank and the only thing that they can offer you is a savings account, money market, or CDs, then that's the only rate of return you're going to get. So if the savings account is only paying you 0.1%, then you're only going to make 0.1%. There's no way of making any more money. And that's just because the bank doesn't offer any other types of investments. But if you go to an investment firm or you open a Roth IRA online with any online brokerage, at least you can invest into a lot more things. But so many people think that the Roth IRA is an investment. So when they open it at their bank and the bank only offers a savings account paying 0.1% or 0.5% of interest, they think to themselves, oh man, my Roth IRA only pays this. No, it's only because the bank can offer you a limited number of offerings. You've got to go somewhere else that allows you to put your money inside investments. Alright, so those are the 4 investments you should never place inside your Roth IRA. However, I also mentioned that there is a Roth IRA imposter that you must avoid. If you ever hear a financial advisor marketing this imposter as a super Roth IRA or a rich person Roth IRA, that's when you want to start saying that this person is being suspicious, because they are going to sell you something that's complete rubbish. Basically, all this is an insurance policy. It could be an indexed, universal, or whole life policy. And the whole concept is that you're putting money inside this insurance product. It grows so-called tax-free over time, and in the end you can take out a loan against whatever the cash balance was accumulated. Now, this sounds great in theory, and if you are making so much money that you're already maxed out your 401k, self-directed IRA, and you can't do a Roth IRA, then maybe you want to consider this as an option. However, if you are at the point where you can't even max out a Roth IRA yet, because you're just starting in your investment journey, and this advisor is trying to sell you a super Roth IRA or rich person Roth IRA, let me tell you this straight up. You've got no business putting your money into that until you've maxed out the real Roth IRA or your real 401k. And the only reason why they're trying to sell you this is because they get paid a major fat commission. And that's the hard and sad truth. The reason you get burned on this type of investment is because these advisors will run these illustrations and they'll show you these predictions of how much money you're going to have 20 or 30 years from now that you can borrow against yourself tax-free. It sounds awesome, but the one thing they always ignore or lie to you about is how much it costs to have the insurance to have this product. They never spend any time looking at those costs that they never see. So now you're paying on this thing for 10 or 20 years, not realizing that you could have put your money somewhere else and made a lot more, especially inside a Roth IRA, which would have been completely tax-free. That's where you have to be careful. If you have an advisor that is trying to sell you one of these super Roth IRAs or rich people's Roth IRAs, and you haven't even maxed out your 401k yet, or real Roth IRA, then you need to get far away from that person. So please, if you've not opened up a Roth IRA, make sure to do so. It's super easy, you can do it online, and never have to leave your living room. Also, it will massively boost your financial future. Can you do me a favor and make sure to share this with one person who is thinking of opening up a Roth IRA, please? I should let others know about this. Also, make sure to add me on your favourite social medias. Why? Because I post on LinkedIn, Twitter, Pinterest, YouTube, and this blog, with content that will transform you into a stronger entrepreneur and investor. I also give discounts that you can get instant access to, so you can grab great deals on products. Also, I hand you motivational quotes that keep you inspired and uplifted. And lastly, it's so you never miss a blog post. The links will be in the description below. I hope you enjoyed this. Until next time, I wish you a lovely day from Aventigo. Thanks so much for watching this video. Make sure to click the link in the description below, and I'll see you next time. Take care.